Hey, what's up? It's Ben here. For those of you who are looking to invest in the stock market or just curious, I want to learn a little bit more about the stock market, I got you. This is mainly for those who don't know anything about the stock market, and this is just my way of helping those ease their way in. So here are 5 things you need to know about the stock market. Number 1, there are stock markets everywhere and everyone trades on the stock exchange. If you want to get technical, there are 144 exchanges around the world. Some exchanges are small with a market capitalization of only a couple or so billions of dollars, and what the market capitalization is the total value of all shares issued on the exchange. The biggest one that we all know is the New York Stock Exchange, which started back in 1792. And currently it has a market capitalization over $21 trillion. The main purpose of the stock market is to allow companies to go public and have access to a larger pool of investors, which leads to point number 2. Initial public offering, also known as IPO. This is when companies get into the stock market. When companies decide to go public, it's able to start selling bits of ownership in the company to investors. Investors could then start buying and selling pieces of the company, hoping that their holdings would be worth more in the future. It could be like you and I, like the retail investors, or like those big institutional investors. This way, companies can raise capital faster in order to scale and grow the company, which hopefully can create more jobs and help millions of people. And later, when they get super profitable, they can reinvest their profits into growing the company even bigger or issue out a dividend to their investors. And what that basically means is that you'll get money back just investing in them. In a sense, you might think that if companies are growing, then that means the stock market is growing as well, right? And the answer is yes. But now you might be thinking, if the total stock market is growing, then the economy is growing as well, right? Well, that's not necessarily true, and this brings me to point number 3. The stock market isn't a reflection of the economy. 2020 is like the perfect example in the United States. Businesses who are affected by the pandemic are forced to shut down, and because of this, millions of people are unemployed, and every week millions of people are filing for unemployment. But for some reason, the stock market is back up to the level where there wasn't a pandemic. Like, it just seems like the stock market got a cold for a bit and then it recovered. Companies who can adapt will survive, and that doesn't always mean hiring a ton of employees to make it work. Another reason for this is because the real value of the company doesn't drive the stock price. It's the popular stories that drives it. Granted, stories can be backed up by facts, or people can just hype up a company for more exposure. And just imagine a ton of positive news coming out for companies. If that's the case, the stock market will just shoot right up, and that won't give you any signal that the economy is doing bad, right? Which would be misleading. Number 4, stock markets fluctuates. In America, if you want to know how the stock market is performing, you want to look at the stock exchange and see how they are performing. Another way to do this is to look at an index, which basically is a collection of a bunch of stock and its share prices to come up with a number to see how the stock market is performing. For instance, in the United States, you have the S&P 500, and that tracks 500 of the largest companies on the exchange. And speaking of index, you can buy into an index fund like a stock, and if you believe it'll go up over time, you will be rewarded for it. Stock prices go up and down when the market opens, and that's why the overall market fluctuates. And there's a lot of factors that can affect it: company news, economic conditions, and foreign and domestic policies. That's why sometimes when you hear major news come out, you'll almost immediately see a change in the stock market. And if the entire market is struggling, even strong, healthy companies will be dragged down with it. Number 5, bull markets versus bear markets. You'll hear these phrases or words being tossed around a lot if you are talking about the stock market. To simplify this, bear means the price is falling and bull means the price is rising. And if someone says they're bullish, then they think it's likely to go up in price. And if someone says they're bearish, then they think it's likely to go down in price. If you put all this together, you should get an idea of what a bull and bear market means. And if you want to get technical with the bull and bear markets, a bull market occurs when the market rises by at least 20% and continues to grow. And a bear market occurs when there is a prolonged decline in prices from its recent high and it's more than a 20% drop. And depending on how you want to view it, you can make money in both of these types of market. It doesn't mean that if we are in a bear market, we are always losing money. For others, they might see it as an opportunity to invest more and make more money in the long run when things are better. Overall, I hope this video was somewhat informative and that you'll be more interested in investing later on in the future. And if you're interested to invest, you might want to consider signing up with a brokerage first like Webull so you can actually buy stocks. And if you do, you can get 2 free stocks from them just by signing up. Link is down below if you want to check it out. If not, I have other beginner investing videos to help you out. And of course, it's all for free. I have nothing to sell you. I mostly talk about making money and showing others how they can do it as well with no strings attached. And I also show you my own personal portfolio as well from time to time. And if you find this to be useful, maybe consider giving this video a like and subscribing for more videos. I'll catch y'all later.